Welcome to this Killik Explains finance video. This week, are hedge fund managers really alpha craftsmen? That's clearly not my expression, it's the latest expression doing the rounds. Let's take a quick look. So the background is this. Hedge funds claim to add alpha. Now a quick word about hedge funds in a moment, but I cover some of the elements of this video in more detail elsewhere, so I'll give you a link at the end for that. Hedge fund managers say, we charge more money than other fund managers because we are more skillful. We add alpha. Now, some people think, well, that means in the context of an equity hedge fund, you're just better at picking stocks. No. Say Craftsman alpha fans, it's a relatively new expression. They say there's more to it than that. Clearly, you're paying us to do more than that. But what is the question? So, the buts. Here's the problem with everyone saying there's a lot of craft in hedge fund management. October, and this is 2018, has been the worst month in 7 years for hedge funds, according to hedge fund research. So it's all very well saying we're craftsmen, but what exactly are you crafting? The HFR index, well-known index of hedge fund performance, is down 1% for 2018 so far, the point I'm recording this, and 1 in 4 funds positive for the month. 1 in 4, 25% of funds managed a positive return in October. Not looking so crafty at the moment. So let's take a look. A reminder about equity hedge funds, we'll take a look at one area where they claim to add craftsman's alpha and then conclude about whether or not we should believe the hype. So, first of all, equity hedge funds. For those people not sure what those are, and we're going to look at equity ones, not currency, property and so on. Some are listed, many are privately owned. So as a retail investor, you can only buy the ones that are publicly available, the rest are closed to you. They have broad mandates. They're called hedge funds because they can do things that other funds simply can't, the regulated ones. So most of them can gear up and bet on rising or falling prices. They can bet long or short, or a combination of the two. Now, Craftsman alpha is this new expression doing the rounds, is all of the activities associated with portfolio management after a style choice is determined. So that's where the value gets added, because people say, well, what are you doing that a cheaper fund manager isn't? And they would say lots of things. So we're going to look at 4 of the biggest, most well-known styles, take one and drill down a bit into what this Craftsman alpha is supposed to be. So, style choices would be what? So basically there's that part of the thing. Well, what would be a style choice? Well, there are more than 4, but the biggies often are value. So, I'm a fund manager who buys the cheapest, best value stocks in the market, and they will beat the pricier ones, because lots of studies and history suggest they might. Momentum is another one. Better stocks stay better for longer. So in other words, you take the ride, okay? You get behind a market movement and you make money that way. Defensive, low risk, high quality stocks tend to beat the opposite. Now you don't have to believe all these claims, but the one is there is science to back some of these up, and good managers will say, well, I'm the man or I'm the woman or whoever to get behind these strategies and pick the right stocks and carry high yield beats low yield. So far we're just defining 4 ways of screening assets potentially using different styles. Now, why is one of them in red? Let's just drill down. We can't do Craftsman alpha for all these, we'll be here all morning, but let's do one of them and just take a look at where is this extra value being added. So, there are differences, not only in the type of style portfolios, value, momentum, or a combination of the two, for example, but in how different managers choose to build them. And that's where this Craftsman alpha supposedly comes in. So, what do we mean? Let's look at some of the approaches. So, first of all, basic decisions if you're running a hedge fund. Because you can bet on rising and falling prices, if you're in the equity space, do you just go long only? Do you just look to buy more cleverly than other fund managers? Are you long short? Which means if you're looking at, say, value stocks, do you buy cheap and short or sell expensive ones using derivatives, for example? Or do you blend? Are you a combination of value and momentum, which is possible? Now, defining value stocks. Let's just take that one style for a moment. There are a number of ways you can look for cheap stocks, and this is not rocket science, if you like. A normal fund manager can do this. So price to book, price to earnings, and price to cash flow. So there are various ways of screening for cheap stocks, and different managers will employ different routes. The craft, if you like, comes in beyond that. So if you like, this is the extra value added. So examples, I'm just going to give you 2 or 3 here. Portfolio weightings. So you've chosen your target stocks, if you like. Do you then go in terms of how much of them you buy on a value basis, market cap weighted? Do you rank the stocks according to how well they fit your criteria and then buy more of the ones that fit them better, if you like? Or do you go evenly weighted and just say, I've got £100,000 to invest, there are 10 stocks, £10,000 a pop? Now, There is actually no right answer to that question. This is where the craftsmanship comes in. So say fans of Craftsman's Alpha. And this is just drilling down that value style. Then there's blending different styles. So let's say you are a value and momentum investor on behalf of your investors. Do you find the best value stocks and blend with the best momentum stocks? All right, so in other words, you start with two lists and combine into one. Do you try and build a single list applying both criteria simultaneously? All right, and if you do that, you'll get different lists. So again, just the way that you choose to blend different styles can affect the outcome in terms of what you end up with under the bonnet of your portfolio. Then there's rebalancing. So what happens when your portfolio starts to drift? You get style drift, as it's known, because the market changes, things go up and down, components move around in value. So how often do you rebalance? On what criteria are you going to rebalance, and at what cost? And fans of Craftsman Alpha would say that skilled managers are able to give you the best result on those sorts of criteria. Now, this sounds great, and this is just drilling down very a narrow channel in the value style, if you like. The problem is this: given there are no well-defined rules on how to create Craftsman Alpha, there can be significant variation across managers. And how significant is apparent from the statistics I'm about to put up. So, looking at recent results from HFR research, if you like, the top 10% of funds have returned around 6.6%, the bottom 10% have lost 13.7%, and the dispersion has widened to 2018. So the best are getting better, the worst are getting worse, and the gap between them is widening them, which creates a bit of a problem for investors thinking, is there any craft here or not? So in conclusion, I would say some funds clearly do deploy genuine alpha, and you could call it Craftsman Alpha. And if you know how to hunt them down, they might be worth hunting down accordingly. But others are expensive ways to make technology bets. One cynic put it recently that they're hedge fund hotel residents, if you like. Now, hedge fund hotels are just the big tech stocks, the Facebook, the Amazons, the Googles, the Netflix. And all these funds are doing is basically charging a lot of money to make big, risky, geared bets on some of those technology stars. So you need to be able to look under the bonnet. You've got to drill down. You've got to work out what the strategy might be and think to yourself, is this genuine craft, or is it frankly pinning a tail on the donkey, and that donkey being the big tech stocks? So there you have it. editor@killik.com with any questions, or if you want to find out what those other videos are on hedge funds, and you can also help yourself at killik.com/learn.